Coming to distribution of profits among the partners. Now students, the net profit is the profit that we have earned during the year. Profit and loss account actually gives us a figure of net profit that is being generated or that has been generated or earned by a business during a particular year. Now how that profit is distributed among the partners is actually shown by P&L appropriation account. So what is a P&L appropriation account? It is an extension of profit and loss account which shows the distribution of profits earned. That is, it is an extension of profit and loss account and it shows the appropriation of the net profit that has been earned by a business during the year. Remember, all the adjustments which relate to partners, like in the terms of interest on capital, salary, commission, etc., are passed through P&L appropriation account. So what are the basic journal entries for preparation of P&L appropriation account? The first entry is transfer of profit or loss to the P&L appropriation account from profit and loss account. So in case profit is there, it is transferred as profit and loss account debited to P&L appropriation account. That is transfer of profit. And in case it is loss, so it would be P&L appropriation account debited to P&L. That is in case of loss. Then students, once the profits and losses have been transferred to P&L appropriation account, partners would be allowed any sort of interest, commission, etc. that has been agreed through their partnership deed. Let us look at entries relating to these adjustments. The first of these adjustments is interest on capital. Interest on capital. Now students, interest on capital is allowed to partners. So the entry would be interest on capital account debited to P&L appropriation to partners capital account. It would be allowed to partners capital account first. And remember, in case we are preparing fixed capital account, then there should be transferred to partners current account. Now students, once this interest has been transferred to partners capital account, then this interest should now be charged to P&L appropriation account. So entry would be profit and loss appropriation account debited to interest on capital account. Now students, remember the basic rules are same as of personal, real and nominal accounts. So we have followed the same 3 golden rules to pass these journal entries. Coming to other kinds of charges, like for example, you can have interest on capital. The second thing can be salary to a partner. Remember, it is considered to be an appropriation. Salary to a partner. In case a partner is entitled to a salary, the entries will remain same, and instead of interest on capital, we will write salary debited to partners capital and then P&L appropriation debited to salary to partner. You can write salary to a partner so as to distinguish it from normal salaries paid to employee. Salary to partner account. Similarly, in case it is commission, Remember, you can then replace commission to a partner to partner's capital and then P&L appropriation to commission. Then we have those amounts which have to be collected by the firm, like for example interest on drawings. So what about interest on drawings? It is something which the partners will pay to the firm and would be considered as an income for the firm. So in case of interest on drawings, the journal entry would be partners capital account debited to interest on drawings. Then this interest on drawings would now be transferred to P&L appropriation account. So then the entry would be interest on drawings debited to P&L appropriation account. Then students, once all these adjustments have been made through your P&L appropriation account, final balance is called as either divisible profit in case it is profit or divisible loss in case it is loss. So for dividing the final profit among the partners, the entry would be passed as, for profits, the entry would be P&L appropriation account debited to partners capital account this is divisible profits, and remember it would always be divided among their profit sharing ratio. Then for loss or division of loss, the entries would be partners capital account debited to P&L appropriation account this would be in profit ratio and it would be your loss, the amount of loss. Remember, I am writing it as or because only one of these entries would be passed. Either there would be profit or loss which has to be adjusted among the partners capital account. Now students, just remember one point. In case we are preparing current accounts, then replace partners capital account by partners current account.